failed spectacularly once. It wasn't in a lab or a launch pad. It happened long before rockets and electric cars were even on my radar. When I was a teenager, I had saved some money from various odd jobs, delivering newspapers, coding BASIC for local businesses, and doing yard work. Rather than manage that money thoughtfully, I made a series of hasty purchases. I bought expensive gadgets, random collects, and even tried to impress friends by footing the bill for outings. Gradually watched my balance shrink without any real gains in experience or knowledge. Then, in a moment of impulsive excitement, I invested what was left of my savings in a highly speculative venture recommended by someone I barely knew. Predictably, it flopped. All that money I'd spent months and months setting aside was gone. In the moment, I felt humiliated. I wondered how someone who prided himself on logical thinking and ambition, could be so reckless with something as tangible as my own finances. The breakthrough came when I realized it wasn't just the act of losing money that bothered me. It was the recognition that I had no structured system for managing it in the first place. I had been incredibly thorough in teaching myself about technology, spending nights reading programming manuals, building little robots, devouring any scrap of science fiction I could find. But I'd never applied the same rigor to financial literacy. The epiphany was simple yet powerful. The principles of budgeting, saving, and investing are as essential for building a sustainable life as a strong enduring foundation is for building a rocket. Looking at all of you now, I see visionaries, entrepreneurs, and creative minds bursting with potential. Perhaps you've experimented with different ideas, even tasted a bit of success. Yet many of us, myself included in those early years, overlook the foundational skill set of proper money management. If you don't understand how your finances function, how to make them grow, and how to protect them, it's like building a rocket without monitoring fuel consumption. You might lift off briefly. You'll struggle to reach orbit. So here's the path I propose to start seeing financial literacy as part of your personal and professional toolkit, especially if you dream of launching a startup or driving transformative change in technology. Don't rely on secondhand advice from reliable sources and reliable, so wait for a crisis to wake you up. Begin now by learning how to structure your budget, how to set aside savings systematically, and how to research solid investment vehicles that align with your goals. Viewing this as an exciting adventure, a journey of discovery rather than a chore, can make all the difference. A financially informed individual doesn't just build wealth, build the confidence and leverage needed to take on ambitious projects. That's what I'd like us to explore together today, how to learn budgeting, saving, and investing early so your capital fuels your dreams instead of running out before your vision has a chance to soar. Now, let's dive into the core lessons I've learned, the steps I believe will help you avoid costly mistakes, the methodologies that will empower you to harness your resources effectively. This is not simply about numbers on a spreadsheet, it's about crafting the future you want, free of unnecessary financial stumbling blocks. By the end of our time together, my hope is that you'll walk away with both the inspiration and the tools to chart a new course for your finances, laying the groundwork for everything else you aim to achieve. If my personal story teaches us anything, it's that no matter how brilliant your ideas may be, they can only take flight if the runway is strong enough to support them. Financial literacy provides that runway. Let's begin. Believing the power of systematic thinking, I'm confident that once you can understanding and applying the fundamentals of budgeting, saving, and investing, you'll find opportunities unfolding in ways you never expected. Think of this as the ignition sequence for your next big leap. Let's ignite it together. Key point 1 centers on the foundational principles of money management. I invite you to imagine your own first steps as we embark on this exploration of financial literacy. Miserable and kind of Let's start by placing ourselves in a mindset of discovery. What does it actually mean to be financially literate, and why is it so critical, especially if you have a vision for a groundbreaking startup or a life-altering technology? Why do some people succeed in building significant wealth from modest beginnings, while others with seemingly greater opportunities fall short? These questions set the stage for our first core focus, identifying the core building blocks of budgeting and saving and uncovering why so many people overlook or undervalue them. Imagine you're designing a new software application. You'd begin by understanding the user's needs, capabilities of your platform, and the constraints of your resources. Now apply that same logic to your personal finances. Ask yourself, what are my immediate and long-term needs? What resources do I have right now? And what constraints do I face? Without clear answers, it's easy to find yourself spending impulsively or saving aimlessly. Delve into a quick case study that underscores the power of well and systematic saving. A young engineer named Pryor found herself fresh out of university with student loans, a decent salary, dreams of launching her own robotic startup in 5 years. Most of her peers worked at established firms, using their earnings for new apartments, cars, or travel. Pryor decided on a different path. She meticulously tracked her expenses, noting every purchase from groceries to entertainment. She separated essential costs from discretionary ones and set a firm savings target 25% of her monthly income. She also committed to an emergency fund through months of living expenses stored in a highly liquid account. Over time, she continued to refine her approach by moving surplus funds into relatively stable investments, such as diversified index funds. When the moment arrived for her to bootstrap robotics idea, she didn't need to beg for capital from reluctant investors. She had built her own way through consistent, disciplined budgeting and saving. Analyzing her journey, you can see she leveraged several advantages of basic financial literacy. First, she knew her month cash flow details and created a reliable plan. Second, she executed consistently. She did not waver from her saving goals, even when tempted by lifestyle inflation. Third, she positioned herself strategically. The emergency fund provided a safety net. Her investments grew modestly but steadily over time. These seemingly small methodical steps formed the bedrock upon which she built her dream. Far from a random occurrence, this is the natural result of applying first principles, something engineers love to do. Financial literacy is, in essence, the engineering your own economic ecosystem. One might ask, how do we apply this practically? First, you identify the streams of income you have, whether they come from a salary, freelance projects, or side hustles. Next, you categorize expenses to know exactly where your money goes. Is it a want or a need? Add long-term value or provide only momentary satisfaction? Then you establish a saving system. It could be automatic transfers into a high-yield saving or strings account or strategic deposit schedules aligned with your paychecks. Start small if you must, but be consistent. It might seem tedious at first, yet the clarity it brings is transformative. You'll notice your spending habits becoming more intentional, and you'll be surprised at how much money can recapture simply by eliminating non-essentials or upgrading your approach to certain bills. Some people opt for advanced budgeting software, while others use basic spreadsheets. The tool matters less than the commitment to use it properly. A breakthrough emerges once you see budgeting not as a constraint, but as an enabler of your future ambitions. Imagine how your energy and creativity would multiply if you had the financial runway to explore innovative ideas without constantly worrying about next month's rent. When you know your financial foundation is strong, you can take calculated risks in entrepreneurship or career changes. The entire process, from mapping out your budget to setting aside a monthly saving amount, fortifies your resolve and lowers anxiety. Is telling your money where to go instead of wondering where it went, said John C. Maxwell. And his words resonate because they capture essence of proactive financial management. The conclusion here is that basic budgeting and saving form the DNA of your financial life. These practices aren't just for those looking to retire comfortably. They're crucial if you aim to innovate, to build or disrupt an industry. Without a stable baseline, you risk scrambling for resources at inopportune times. By establishing a budgeting system and adhering to a disciplined saving routine, prepare yourself for strategic moves in the future. The door to bigger investments or entrepreneurial ventures opens more smoothly when the fundamentals are in place. So, by mapping out your financial flow in granular detail, set aside time, perhaps once a week, to review your progress. Observe how these daily decisions accumulate into long-term outcomes. Then, watch the magic happen when your finances start to work in your favor rather than against your ambitions. That moment, often subtle at first, is a powerful indicator that you're charting a new path. Let's transition from this foundational view of budgeting and saving to something more personal and immersive. In the second key point, we'll explore how real life stories illuminate the emotional triggers and challenges that surround money management. We'll see how personal narratives, both triumphant and cautionary, that are miserable and kind of get you down, guide us toward deeper wisdom about saving and anxiety. A few years ago, a small group of brilliant coders who had launched a promising AI platform. The technology was so advanced that larger companies started circling them like hawks, eager to acquire or invest. It was a high-stakes environment with huge potential rewards, yet the team found themselves in a financial predicament. They had extraordinary talent, but no savings. Every bit of revenue went back into the business, and personal finances were in disarray. One of them confided in me how he was behind on rent. Another was juggling credit card debt after using personal line of credit to fund operational expenses. The anxiety was so palpable you could sense it in every meeting. This story stuck with me because it highlighted something I've seen repeatedly. You can have groundbreaking ideas, exceptional skills, a vibrant market ready to embrace your innovations, but if your personal finances are on shaky ground, your stress levels and risk profile climb astronomically. Direct emotions money mismanagement can overshadow even the best at logical vision. That lingering fear of, what if this fails, can lead to suboptimal decisions, such as hastily accepting poor investment deals or sacrificing equity too soon. In observing these founders, I noticed how their personal relationships with money, formed over years of unconscious habits, influenced every business decision. One of them had grown up in a family where credit card debt was the norm. Another had parents who never talked about finances openly, creating a mystery around money. A third was raised in a financially savvy household, but had rebelled as a teenager and never re-embraced those lessons until it was almost too late. Their backgrounds were different, but the challenge was universal, learning to integrate financial literacy into their personal and professional lives so they could navigate the storms of entrepreneurship without drowning in debt or anxiety. They faced numerous hurdles. First, the demands of a startup can be relentless, leaving little room to study financial planning. Second, it's common to believe revenue growth alone will solve all problems. If the product just hits the market successfully, personal finances will sort themselves out. Third, there's often a hesitation to seek professional help because founders pride themselves on self-reliance. They overcame these challenges by confronting uncomfortable truths about their spending habits and acknowledging the emotional triggers that led them to avoid saving or budgeting. One day, an offer came in from a major tech conglomerate. It included a significant upfront payment, but also entailed losing a controlling stake in their creation. They had to decide whether to accept immediate financial relief at the cost of long-term autonomy or push forward independently. Rather than the jump at the cash, they paused to analyze their budget meticulously, personally and collectively. That's when things shifted. They recognized that if they each cut back on certain expenses, luxuries that weren't essential, they could have a few more critical months without relinquishing too much equity. They renegotiated with suppliers, restructured personal debts, and found a creative way to funnel small pools of personal savings back in the company. It was uncomfortable and required sacrificing some conveniences. It gave them a new sense of control and unity. From this struggle, they learned that financial discipline isn't just about preserving wealth, it's also about preserving the integrity and tag of your vision. As they aligned their personal financial strategies with the business strategy, their confidence grew, and they began to attract better funding offers. The synergy was tangible. Personal budgets and business budgets fed into each other, reinforcing a culture of sustainability rather than short-term gain. The lessons here go beyond spreadsheets and sales forecasts. The emotional fortitude they developed in learning to differentiate between needs and wants, in setting realistic goals, and in finding ways to invest any surplus was as pivotal as their technical breakthroughs. It became less of a mystery and more of a tool, allowing them to optimize both of their personal lives and the trajectory of their startup. Financial literacy is a powerful form of freedom. It lets you shape your future rather than be shaped by circumstance. As Oprah Winfrey once said in a moment of heartfelt reflection, to truly connect this story to all of you, consider the emotional patterns in your own life. You think about money, whether it's for your personal expenses, your startup's budget, your next big project, what feelings surface? Do you sense fear, excitement, confusion, or maybe a combination of these? Reflect on where those feelings come from. Are they tied to past experiences, family expectations, or cultural narratives that downplay the importance of investing? Recognizing these emotional undercurrents is often the first step to reshaping your relationship with money. What is particularly inspiring about the coder's transformation is that it was not instant. It required them to stay mindful of each expense, question every financial assumption, and shift from a scarcity mindset of feeling pressure to grab the first lifeline to an empowerment mindset, believing in their capacity to gate and plan. They faced plenty of internal friction as they overcame old habits. The results spoke for themselves: a more stable personal life and a stronger, more autonomous company. As we move forward, think about how this story can mirror your own. Maybe you're not running an AI startup. The tension between ambition and personal financial security is universal. The takeaway is that you can't merely treat money as an afterthought if you aspire to achieve something big. You have to weave financial literacy into the fabric of your daily life. When that happens, you'll notice a shift in both your mindset and your tangible outcomes. From these personal narratives, let's transition to a more analytical perspective. The next key point, we will examine broader market trends, statistical data, and in-depth research that underscore the importance of early investing. We'll explore how economic patterns shape opportunities for those who master their finances early and outline tangible ways to leverage those insights. Those things that are miserable and kind of get it is astonishing what happens when you begin examining the broader economic picture. We live in an era where information moves at lightning speed, innovation cycles accelerate, and entire industries can shift overnight. Within this dynamic environment, understanding the statistical landscape of personal finance becomes a strategic advantage. Studies from organizations such as the Federal Reserve consistently show that individuals who begin saving and investing in their 20s or early 30s have far greater long-term net worth than those who start later. This difference isn't marginal. it can mean the difference between thriving financially and continually scrambling to catch up. According to a recent data set compiled by a leading financial institution, average American household faces a retirement shortfall of nearly one-third the required funds for comfortable post-career life if they don't begin saving until their 30s. Multiply that gap by millions of people, a systemic risk, an entire generation of professionals who could be unprepared for life's later stages. Early investing combats that shortfall by harnessing the power of compounding. Money you put away today grows exponentially, generating returns that themselves generate returns over time. This phenomenon is not limited to any single region or economy. Universal principle that underscores every wealth building blueprint, whether in Silicon Valley or Shenzhen. Market trends further reinforce the argument for proactive financial literacy. Technology has democratized access to investment platforms, whether through commission-free trading apps or peer-to-peer lending sites. We're witnessing a surge in retail investment participation, with a growing number of young professionals diving into stocks, cryptocurrencies, and other asset classes. Yet many jump in without adequate research. Chase hype or rely on social media tips that may have no basis in sustainable strategies. While technology has made investing more accessible, it has also introduced new pitfalls, such as speculative bubbles and volatile market swings. That's where in-depth research becomes vital. Rather than merely following trends, informed investors interrogate the fundamentals, industry growth rates, corporate balance sheets, and macroeconomic indicators to discern whether an investment aligns with long-term objectives. A wealth of research supports the notion that diversification is critical. Spreading out your investments across different sectors, asset classes, and geographies reduces risk and can help stabilize returns, whether you choose index funds, exchange-traded funds, or venture into entrepreneurship. The lesson remains the same: diversification is the seatbelt of finance. Famed economist Harry Markowitz captured the essence of this approach when he famously stated, "Diversification is the only free lunch in investing." By balancing your portfolio wisely, you protect yourself against unpredictable market downturns and give your finances multiple avenues for growth. Practical applications of these insights are manifold. If you're new to the investing world, you might begin with a simple strategy: contribute regularly to a diversified fund. Reinvest your dividends and automate the process so you're not relying on willpower each month. If you're more advanced, you might explore opportunities in early stage startups or real estate crowdfunding with a clear understanding of the accompanying risks. The key is to align your investment choices with your risk tolerance and time horizon. How long do you plan to keep your money in the market? How much fluctuation can your finances or psyche handle along the way? Answering these questions demands a level of introspection, education that can't be bypassed. Looking ahead, the future of promises new frontiers. Artificial intelligence is already influencing algorithmic trading and wealth management. Big data analytics can forecast consumer behavior with increasing accuracy, providing investors with insights that were previously the domain of specialized hedge funds. Blockchain technology offers the potential for decentralized finance solutions that bypass traditional intermediaries. These aren't speculative dreams, they're emerging realities that reward those who stay informed. Given the speed of change, adopting a lifelong learning mentality is crucial. Financial literacy isn't a one-time course you complete, it's an ongoing process of refining your strategies in a rapidly evolving economic landscape. Embrace the inevitability of change and direct it toward growth. This perspective, attributed to the late management guru Peter Drucker, encapsulates the mindset required to succeed. We can't predict every market move or technological breakthrough. We can prepare ourselves with a robust financial foundation and the agility to adapt. That's how you turn volatility into opportunity instead of becoming a victim of market swings. As we anticipate future trends, it's critical to ground yourself in an evidence-based framework. Guard against herd mentality by insisting on data and credible research. Engage with financial communities, read thought leadership pieces, and question assumptions. The synergy of curiosity, caution, and calculation can serve you well, whether you're investing in emerging tech stock or deciding on the best time to expand your own business. In sum, the analytical perspective shows us that early budgeting, saving, and investing aren't mere buzzwords. They're supported by tangible data, observed market trends, and a wealth of research that repeatedly confirms their value. You equip yourself to ride the waves of economic change rather than be swallowed by them. This transitions us seamlessly into our next focal point, an interactive look at how to internalize and apply these lessons in real time, turning theoretical knowledge into hands-on experiences that can reshape your financial trajectory. You think that a miserable and kind of getchy-bachin, it's one thing to gather all this information and not in agreement. It's another applied effectively day after day. Often, the biggest gap is between knowing and doing. How do we bridge that gap? I'd like to propose a little thought exercise. Back to the last significant financial decision you made. Perhaps it was renting a new apartment, investing a small sum in a stock, or even deciding whether to take out a car loan. Imagine you could replay that decision, but this time with full awareness of your budget, your savings goals, and your long-term investing framework. Would you do anything differently? Negotiate more firmly? Allocate your money differently, or pause to gather more data? This mental exercise isn't about regret. It's about preparation for the decisions yet to come. Now visualize a group setting, friends, family, or coworkers where you openly discuss financial goals. In many cultures, talking money is taboo, making it challenging to share best practices or seek advice. But consider the transformative power of group discussions. By hearing how others approach budgeting, you can refine your own systems. If someone shares that they're using a particular app that categorizes expenses and projects future balances, try it out and see if it helps you stay on track. In exchange, you might pass along your experiences with a successful side hustle or a particularly effective savings hack. A community normalizes financial conversations. Everyone benefits because the collective knowledge grows. Experience sharing also plays a critical role. If you've ever taught someone a skill, you know how to cement your own understanding. Perhaps you and a few peers can form a casual workshop where each month one person demonstrates a financial strategy they've successfully implemented. It could be anything from generating passive income streams to analyzing real estate opportunities. You'll find that articulating your methods clarifies your thinking and reveals areas you can improve. Direct practice is where the rubber meets the road. After you've gathered insights, discuss them in a group, and heard personal stories, set aside dedicated time to apply one new tactic. For instance, to set up a new budgeting tool or open an investment account, the idea is to move from conceptual acceptance west. Investing is important to tangible action. I've funded my investment account with a 100 and Zon audit and set an auto deposit schedule for each paycheck. Repetition of these practical steps establishes new habits, turning occasional inspiration into a steady drumbeat of progress. Summarizing your learning solidifies these changes. Take a moment to jot down the specific steps you've taken. How much did you budget for discretionary expenses this month? Which index sector ETF did you choose to invest in, and why? Which behaviors made the biggest difference in freeing up extra money to save? Logging these details, you create a personalized financial playbook. Over time, as you refine it with new strategies or insights, you'll have a living document that tracks your evolution. By engaging in this interactive approach, you build a kind of mental muscle memory. Repeated experiences of budgeting, saving, and investing will feel less like chores, and more like second nature, and integral more like integral part of who you are. A colleague once told me, the fastest way to grow your confidence around money is to see your own discipline in action. That discipline is a way of reinforcing itself, especially when you witness incremental wins, like watching your savings account grow or receiving your first dividend payment. Now, keep that momentum going as we shift into our final key point, which focuses on solving real-world financial challenges, building resilience, and measuring success. This will help tie together every strategy and perspective we've discussed so far, ensuring you not only know what to do, also how to gauge whether it's working. Miserable and kind of one of the recurring themes I've encountered is that people know they should budget, save, invest, but they struggle when financial obstacles arise. The challenges can be manifold: sudden medical expenses, a drop in freelance income, or the unexpected need to pivot your startup. Identifying these hurdles is the first step. For many, the most common challenge is inconsistent cash flow, especially in entrepreneurial or gig economy roles. Another challenge can be the sheer overwhelm of choices in the investing world, where new asset classes and fintech platforms appear constantly. A third challenge stems from psychological barriers, fear of losing money, rooted pessimism about markets, or even complacency that leads to inertia. Once the challenges are identified, a root cause analysis often reveals underlying issues that need addressing. If your income fluctuates drastically month to month, the cause might be a lack of diversified revenue streams. If you're struggling to commit to investments, maybe you haven't established a clear timeline or risk profile. If you're afraid to budget because it feels restrictive, perhaps the root because it is an unexamined belief that money is scarce, or that managing it carefully will dampen your spontaneity. This introspective process can be uncomfortable, but it's vital for tailoring your solutions effectively. Solution proposals may look different for everyone. For someone struggling with inconsistent income, multiple revenue streams through various freelance platforms or part-time engagements might stabilize cash flow. For someone overwhelmed by too many investment options, narrowing down choices to low-cost index funds, consulting with a fiduciary financial advisor can bring much-needed clarity. If psychological hang-ups are the root cause, techniques like journaling about financial decisions, seeking mentorship from someone you trust can diminish fear and boost confidence. The goal is to craft solutions that are specific, measurable, and aligned with your financial vision. Action plan transforms these solutions from ideas into tangible steps. Suppose you decide to tackle inconsistent cash flow. Your plan might outline a sequence. Identify 3 potential side gigs, analyze their earning potential, set up a separate bank account to handle business, or related earnings, and schedule a monthly review to track progress. Each milestone is clear, with a defined deadline. The discipline of writing this down and following a timeline makes a world of difference. It moves you from wishful thinking to intentional execution. You begin to see money management not as a reactive scramble, but a structured, proactive system. Defining success metrics is crucial for staying on course. Without a way to measure progress, it's easy to get lost in the daily grind. Metrics include your monthly savings rate, the consistency of your hustle income, or the return on a particular investment over a specific period. It may also be more qualitative, like your stress level regarding finances or your sense of preparedness for unexpected expenses. When you review these metrics regularly, you can pivot as needed, maybe by adjusting your budget allocations, rebalancing your investment portfolio, or exploring new opportunities for income. The metrics serve as a compass, guiding you toward incremental improvements. As you continue to solve financial challenges through this methodical approach, you build resilience. You gain confidence in your ability to weather economic downturns or adapt when your startup needs more runway. This resilience, in turn, frees you to take calculated risks, expanding your product line, investing in that new technology, or even exploring philanthropic endeavors. Resilience is built through small acts of discipline repeated consistently, said an old mentor of mine, and it rings true with financial management. The synergy between discipline and adaptability is what keeps you forging ahead even under uncertain conditions. Having walked through discovery, storytelling analysis, interaction, and problem-solving patterns, you should now see how each perspective illuminates a different facet of budgeting, saving, and investing. From understanding fundamental principles to applying them under real-world constraints. You have a roadmap that is both strategic and flexible. It's time to bring all these threads together and chart a course for the future. That future beckons us now. With the foundational framework in place, we can look ahead to the possibilities that unfold when financial literacy becomes a cornerstone of your life. Let's explore that vision and issue a challenge that will galvanize into turning knowledge into lasting impact. Miserable and kind of get to envision a world in which each of you has not only mastered the fundamentals of personal finance, but also leveraged that mastery to drive bigger ambitions, be it in business, technology, or social innovation. Picture how much more daring you could be if you had the financial cushion to experiment, pivot, or endure an economic winter without debilitating stress. Consider how many breakthroughs remain unrealized simply because people give up too early due to financial pressure. Now imagine those same people, well prepared and well resourced, just a bit longer until their vision takes flight. My personal dream is to see a generation of entrepreneurs, engineers, and creative thinkers who view financial literacy as indispensable as coding or design skills. You grasp money's mechanics at an early age, you unlock your capacity to build, iterate, and sustain revolutionary ideas. This isn't merely about accumulating wealth. It's about fueling the engine of progress. Money should be the wind at your back, not a chain around your ankles. The challenge, then, is this: commit to systematically integrating these principles of budgeting, saving, and investing into your daily routines. Don't wait for the perfect moment. As with technology, iteration is key. Make small changes now, measure their impact, refine your approach, and repeat. Track your spending this week. Dedicate an hour to researching a type of investment you've been curious about. Start an accountability group with peers who share your goals. Such small steps create momentum, and momentum changes lives. If you ever feel uncertain or overwhelmed, know that you are not alone. Support exists, whether it's found in online communities, local mentorship programs, or professional financial advisors. Seeking help is a sign of commitment, not weakness. When you collaborate with people who understand your aspirations and can guide you through the complexities of money management, you benefit from both their expertise and their encouragement. We are interdependent beings, and there is strength in shared insights, especially in the realm of finance where collective wisdom often prevails over individual trials and errors. Standing here, speaking to you as someone who has seen ventures fail and also seen them succeed beyond expectation, I promise you that a solid grasp of financial fundamentals is a non-negotiable asset. Imagine if you could approach each future project, whether launching a cutting-edge AI tool, forging the next evolutionary step in electric transport, or rethinking space exploration, with the firm knowledge that your personal finances won't derail your mission. That assurance is freedom. It's the freedom to dream big, to push boundaries, and to sustain your vision through the inevitable twists and turns. So let me close with this heartfelt conviction: each of you is capable of achieving remarkable things. Embracing financial literacy by learning how to budget effectively, save diligently, and invest wisely, you're not just securing your personal future, you're contributing to a broader ecosystem of innovation and positive change. Imagine looking back a decade from now and realizing that what started as a commitment to manage your money better became a catalyst for inventing new technologies, solving global challenges, inspiring future generations to do the same. We've traveled a long way in this conversation, from my early failures and the lessons learned to an in-depth analysis of market trends, interactive exercises that bring these lessons to life, to problem-solving frameworks that keep you resilient. We've navigated personal stories and big picture data, all converging on one essential truth. Mastering financial literacy is an integral part of your ability to shape the world. I urge you to hold on to the energy and insights you feel in this moment. Channel them into tangible steps that will enhance not only your financial standing, but also your capacity to launch ideas that matter. Whether it's building rocket ships or designing AI-driven solutions that improve lives, every dream takes resources. Let your financial know-how be the fuel that never runs out. And in those times when you doubt or stumble, remember that every setback contains a lesson. Keep refining your strategies, keep reaching out for support, and keep believing that you can and will become the architect of your own future. Thank you for listening, for engaging with these ideas, and for daring to imagine what you can accomplish once financial literacy is firmly within your grasp. May this day mark the turning point where you step fully into the driver's seat of your economic destiny, forging a path that others can follow, learn from, and celebrate. This is the moment for you to stand tall, take that first next step, and set a standard for how money can and should be managed to uplift not only ourselves, everyone around us. Now go out there, manage your resources with wisdom, invest in your growth, and let your innovation shape tomorrow. The universe is vast, full of untapped potential, and your financial foundation is the launch pad that can get you there. Safe travels on your journey, and may your ventures flourish beyond all expectations.